This is the stochastic oscillator, a range-bound momentum indicator designed to display the locations of an asset's close price in relation to its high and low range. It helps identify market momentum and overbought or oversold levels. This indicator is usually simple to use and highly effective. A practical example of using this indicator to trade would be to take long positions whenever both these lines are above the 50 level, with the blue line above the orange line. Conversely, we want to take short positions whenever both lines are under the 50 level, with the orange line above the blue line. But what if we were to multiply this accurate indicator not 2 times or 3 times, but 28 different times, each with a different length, and then used it to identify the overall market momentum? Well, that's exactly what this new indicator does. It contains 28 different stochastic oscillators, each with a different length, making it one of the best tools for filtering out false signals when trading. In this video, we're going to explore how this indicator works. If you find value, remember to leave a like. Let's get into it. So this new indicator is called the Stochastic Heat Map. To add it to your chart, you want to go to TradingView, then open any trading security that you like in any time frame. For me, I'm going to be using the 1-hour time frame of GBP/JPY. Click on Indicators and type in Stochastic Heat Map, and it's going to be this one by Violent. So this is our indicator. As you can see, it's a heat map with temperatures ranging from coldest, represented by the darkest shade of blue, all the way to the hottest, represented by the darkest shade of red. These colors form the overall gradient that you can use to track the momentum of the market. Individually, you can see the different stochastic oscillators right here, stacked from the fastest at the bottom all the way to the slowest up at the top. According to the settings of this indicator, you can see that the increment value is 10, which means the first oscillator has a period of 1, the second one is a 10-period oscillator, then 20, 30, 40, all the way to 280. This white line traversing the indicator window is called the fast oscillator line, and they calculated it by taking the average value of all the 28 different stochastic oscillators. Following closely, we have this line, called the slow oscillator line. This is a smooth version of the fast oscillator line used to identify longer-term trends in the market within the average price data. Now, to change the smoothing values for these two lines, you can access the settings of this indicator, and it's going to be these values right here. The smooth fast option is used to smooth out the fast oscillator line, and then this is going to be for the slow orange line. Then up at the top, we have an option to smooth out the different stochastic oscillators. By default, the EMA is used for the smoothing, but you can choose any of these options. The theme is basically a color theme. By default, the third color theme is going to be selected. Let's take a look at the second theme. And this is how it looks like. And the first theme looks like this. I like the third theme, so I'm gonna stick with that. Increment is right here. As said earlier, it's a value that separates the different periods for the stochastic oscillators. If you want them to be separated by, say, 20 periods, well, you can put that number here. So you'll have the first oscillator with a period of 1, then followed by 20, 40, 60, etc. The Style tab allows you to change the colors of all the 28 different oscillators used. Now, there is also an option to color the price candles based on the different oscillator values, providing a direct visual indication of momentum changes. There is an option in the settings to disable that if you don't need it. To find it, it's hidden somewhere down here. You just keep scrolling, and this is it. I'm not going to disable it because we're going to be using it for our strategy. But there are two options that we're not going to be needing, and it's these two plots. We're going to disable them to hide these two lines. After that, click OK. Now, at this point in time, I know you may be thinking,
but how can we use this indicator to trade?
Well, it's really simple. The darkest shade of red indicates that the bullish momentum in the market is strongest, and these are areas where you should be looking to take only long positions. Conversely, the darkest shade of blue, like here, indicates that the bearish momentum in the market is at its strongest. These are areas where you should be looking to take only short positions. But of course, just like any other indicator, this one cannot be used alone. But don't worry, we're not gonna add 5 more indicators. In fact, the only indicator that we're gonna need is a trend filter indicator called moving average exponential, aka the EMA. We're gonna double click on it and change the length to 200 because we wanna capture longer term trends. And on the style tab, I wanna make it a bit brighter, so I'm gonna change its color to yellow. After that, click OK. Next, we're gonna go over how we can combine these two indicators to create our super profitable strategy. But before we do that, let's talk about the Forex broker called hankotrade. Now, I've been using hankotrade for quite some time. As you can see here, this is my live account on hankotrade's web trader platform. The reason why I think hankotrade is a great broker is because of their low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. For those of us who love high leverage, well, hankotrade offers a maximum leverage of 1 to 500. And if all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000, which means if you deposit, say, $500, they're gonna give you a bonus of $500, giving you a total of $1,000 to trade with. To access the bonus as well as all the other perks, sign up to hankotrade using the link in the video description. Now, back to the video. Now, how do we take a long position using these two indicators that we have here? Well, let me show you. Condition number 1, we confirm that the market is in a bullish trend. For that, we're going to be using the EMA indicator. We need the price to be trading above this EMA, like it is right here, to indicate that the trend is bullish. Condition number 2 is we need to identify a resistance level that's been tested by the price at least once before the final break and close. As you can see, this is our resistance level. The price did the first test of the level right here and failed to break and close above it. This was the second test. As you can see, the price did not break and close above it. Finally, we had a break and close on this candle right here. This is what we're looking for. Now, the last condition is to confirm that during this breakout, basically on this candle, we want to confirm that the market had a super strong bullish momentum enough to push the price all the way to our take profit. For that, we're going to be looking at the Stochastic Heat Map indicator. We need all the 28 stochastic indicators, basically all these horizontal lines, to be colored dark red to indicate that the momentum of the market is at its highest. This is going to increase the probability of the price hitting our take profit. We enter a long position here. The stop loss is going to go right at the most recent swing low. And then for the take profit, we're going to target a risk-reward ratio of 1 to 2. We let the trade run, and as you can see, it was profitable. Of course, to take a short position, we're gonna do the opposite of everything we just did for this long position. Let me show you. So first, we identify that the market is in a bearish trend using the EMA indicator. To do that, we want the price to be trading under this EMA, like it is right here, to confirm that the trend is bearish. Condition number 2 is we identify a support level. Remember, for the long position, we were looking for a resistance level. Now, for a short position, we want to look for a support level that's been tested by the price at least once. So this is our support level. This was the first test where the price failed to break and close under the level. This was the second test. This was the third test. And then on the fourth test, what happened? The price broke and closed under the level. If this candle is a bit too weak, well, you can even fast forward a few more candles, and as you can see, the price maintained its position under the resistance level, which confirms that this is a valid breakout. Now, the last condition is we want to confirm that this breakout is accompanied by the strongest bearish momentum possible. And to confirm that, we're going to be using the Stochastic Heat Map. We need it to be colored blue and to have the darkest shade of blue. This indicates a super strong bearish momentum, enough to push the price all the way to our take profit. We enter a short position here. We're going to set our stop loss right above the most recent swing high. And for the take profit, we're gonna target a risk-reward ratio of 1 to 2, letting the trade run and take profit. Now, this is just one of the methods that we can use this indicator to trade. But there is another way. So on our chart, I added an extra indicator that prints these long and short signals based on a combination of super effective price action concepts. And the way we could use this indicator to trade in conjunction with the stochastic heat map is to identify a long signal that's printed on a candle that's colored bright orange, like this. A bright orange is the second brightest color after the bright red, which means it indicates that the bullish momentum in the market is high enough for us to take this long position. And here was another position. We had a long signal printed on a candle that was colored bright orange. And then here was another one, and another one, and another one. And of course, to take a short position, you identify a short signal printed on a candle that is dark blue, like this. This indicates that the bearish momentum is high enough for us to take this short position. And as you can see, it was a profitable trade. Now, this awesome buy and sell indicator is called PT Market Beacon. PT stands for PineTrades, and it's our own custom indicator developed in partnership with Chart Prime. Now, to get access to it, you can click on this link down in the video description, and you're gonna get access to the PT Market Beacon as well as all the other Chart Prime indicators, which include the Prime Oscillator for momentum and divergence identification. We have the PineTrades Oscillator, similar to the Prime Oscillator, but smoothed out, making it super useful for fast-paced scalping strategies. And then we have the Market Dynamics Pro, a price action concepts indicator that includes changes of character labels, breaks of structure labels, etc. There's the Market Oracle Pro, a super useful indicator for trend analysis, as well as the Prime Screener, which is a screening tool for various trading opportunities. Well, that's basically everything for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.